Good morning, everybody. Welcome to the Ticker Highlight Show. I am Mark Sebastian, your only option. I am joined by one, Leisha J. Leslie, the Queen of the Candles, and of course, Andrew T. Giovinazzi, the Viking of Volatility, the Vicar of the VIX. And I want to start by updating everybody on last week's kind of idea that we threw out. We had thrown out the idea to you guys. Hey, everybody, with volatility looking like it's starting to collapse, take a look at how inexpensive the September, what were they? They were the, we were looking at the September, 13 puts?
I'll tell you in 2 seconds. I think we paid 20 cents for them and they traded 40. So they're the 14s. They're trading 58 now.
They were the 14 puts.
They were.
So there you go. So those have traded. Those are up, and it just goes to show you this is all based on the futures curve and where this is going, and the curve has really changed dramatically from where it was when we met this time last week. So I want you to just put in your head where VIX is now. And then I'm going to add in last Monday, and I'm going to add in the 5th as well. So this is the shift that we have seen. So this front dot is August. The second dot is September. The third dot is October. This is the shift that we've seen in volatility. Yeah, it was the 13 puts, and they're still trading 20 cents.
Really? No.
Yeah.
We bought the 14s.
I think we did both.
All right. I bought the 14s for 20. Sorry.
Yeah. What I want to point out is that this move, now that we're here, this is the time where the volatility ETPs, names like VXX, die. This formation is, and you can see them on the 2-year chart, but on the 3-month chart, this is what creates that slow death for a name like VXX or UVXY or a UVIX. It just absolutely destroys them. Andrew, please mute. If you don't mind, mute yourself while.
I thought I wasn't.
Yeah, no worries. No worries.
Maybe I was. Shoot. All right.
Now, oh, Leisha, how dare you? No, I'm just kidding. But to the one stock that benefits, and this is why I like SVIX as a buy and hold. It's up over 2% today. This is a stock that we can just passively hold to capture this futures term structure. On a day-to-day basis, I said this over and over again, on a day-to-day basis, SVIX, VXX, UVXY, they all move with the VIX. But day-to-day, month-to-month, week-to-week, this math is what controls them. And what's really, I think, exciting is August is about to roll off. So August disappears in a couple of days. And then we have this crazy roll that is going to start affecting VXX, UVXY, UVIX, and SVIX. And this October future being pulled toward the VIX can actually go up a little bit, and this future still has to drop. And that is going to cause these vol ETPs, I think, to be at, SVIX My math says this is going to be over $40 by the middle of September. It's currently $32. Now we've got levers to watch and monitor. We've developed a system to manage. So if you've not had a chance to watch our event from Wednesday, good news. We're going to be doing an encore here in the next couple days. But really, you're missing out on what I think what is our new backbone trade for Trading Desk, and is a really great opportunity to be a part of one of our major flagship services at a price that we're not going to be offering again anytime soon. So I just want to update everybody on where we were from a volatility perspective. And now let's dig into the meat and potatoes, and that is Amazon. And what got my attention on Amazon is market rotation and relative performance. And you're saying, what do you mean by that, Mark? Well, take a look at the performance of Apple coming out of this sell-off. One, I mean, it had a crazy dip on the 5th and is now, above its earning where it was prior to earnings. Nvidia's had a really nice rip. It's now cleared every moving average. And, Meta had a rough day on Friday and a little bit of fall through today. But look at the clearance Meta's made. Meanwhile, Microsoft hasn't fully gotten off the mat yet. And Google, they've got regulatory issues, but they haven't gotten off the mat yet. And Amazon hasn't fully gotten off the mat. So I was looking at this as so that's what caught my attention. Of the three, I thought Amazon is the most interesting because we're heading into rate cuts. Questions around what is the story with the consumer? What is happening here? And what I found interesting is that, Amazon is where it was all the way. I mean, Amazon first got to this level back in February. Now, back then, and that was actually the last time we'd actually done Amazon, was when it was, I was actually surprised. Amazon was right here when we last wrote up Amazon. Kind of funny, right? The difference is that price earnings ratio has come down. All the metrics that we talk about that, Amazon has always historically been inflated at the current price, those are way more reasonable than they were even 6 months ago. Amazon's fundamentals for Amazon, a 42 PE. Leisha and Andrew, when was the last time Amazon held a price earnings ratio in the 40s?
Never.
Right. For Amazon.
I'm going to say never. I don't know if Alicia remembers.
I mean, maybe. I'm just saying it is a rarity. This is a 55, 60 PE stock normally, and now it's in the 40s. So it has me wondering whether they've decided to allow themselves to start making money. And are they going to start doing some things like dividends, like major buybacks, all the stuff they've always kind of pushed back on? But maybe that's part of the reason why Bezos had decided to step away, is that the fun and exciting time for the stock was over, and now it was time for it to turn into, they needed a Tim Cook, not a Steve Jobs, for this phase of the business. And this phase of the business is efficiency and capital return and things like that. So to me, I never thought I'd say this, but I'm thinking about going long for a extended period of time. Amazon at the current at current prices and that's a trailing 12-month PE. The forward PE is probably into the 30s. So I think it's an interesting investment at this point. Alicia, what do you see in the charts?
Let me share my screen.
Yes, let me unshare mine.
Well, we had a nice gap up. It had wallowed here, trying to break up above that median line. Once it did, it went full speed ahead, gapped up. Now it's kind of bull flagging here. I believe it's going to try to close that gap and trade back up to 180, 187. And then from there, I think 189.85. Short term, your support is the low right here, 173.99. As long as it stays up in that range, it is a bullish pattern. Bull flagging, looking higher.
I like it, quick and easy. All right, and Andrew, I'm looking at the premiums for options, and they don't look especially rich. I will start there.
Yeah, I mean, like, my first thought is like, I like your idea, and like, I'm like, okay, I'm gonna sell like a 150 put in January, right? For like I would say investment thesis idea. But look at the 85 calendar, Sept 13, August 30 calendar is $1. Out of 24 vol, it doesn't look very expensive. I wouldn't mind looking at an 82.5 calendar, maybe to Sept 20. That would be $2, which would kind of give us Leisha's 81 level and kind of a simple close. But there's like a little bit of gas in the upside calls in the August 30 cycle. And I think that's partly because writing NVIDIA, right? We got the end of this week or next week for NVIDIA earnings.
I like that idea. My other idea, and this is something I already put into a similar trade. I put into my older sister's account. Full disclosure. I was looking at December options because, like I said, the vol is really inexpensive for Amazon. And how much do you without looking? How much do you think the 180 calls cost? Amazon is $176.
$10?
They're $12. These are the 180 calls in December. So they have 4 months.
I could be dead by then.
Well, here's my point. 1 month ago, about a month ago, Amazon was $202.
Right. No, it's from a price performance point of view, you could end up with like 50% gain or more on those calls.
Yeah, it's a really inexpensive play. I like your calendar idea. That's the complex idea. And then the simple idea, I think, is just buying the December 180 call. So, Andrew, do you want to write those up or
Hold
do you
on
want
here?
me to...
Let me switch my screen here. So I like to get the calendar down to the 182.5. For me, let's see. I'll do a little screen share here. So, all right. So the first thing is, so we have we got the mark. You're going to buy to open. Then 1 AMZN December. What's the term for DECE? Is December 20, 180 calls for $12.40. December 20, 180 calls, $12.40. And if you're a cheapskate like me, so I'm trying to ride this. My idea here is tech should hold up to NVIDIA NVIDIA is the 28th. I want to sell the August 30 calls, try to get the cheapy decay, and then maybe be able to run my calendar trade. So if I sell the August 30s, which again, sensitive to here for $1, they're not going to give me the SEP 13. There's no 82.5s here, so I got to go to SEP 20. And so I'm running that calendar 315 over about $2 on the calendar. So this would be a theta positive complex alternative. So we're going to buy to open, oops, to open one Amazon September. What was that? 20, 182.5 call. And then we're gonna make a calendar trade. I don't know if anybody's asking questions in the comments, and sell to open.
I will get to the calendar, the questions when you're done here.
Open
very shortly.
Let's see, and August 30. So the idea is, my thesis usually, because NVIDIA is such a big thing, and we've already had most of the retail. I think the thesis for holding, Amazon up's pretty good, like super good. And then we should not see a ton of action. And I think our August 30s will basically evaporate. Although if we get to 181.5, kind of Leisha's level up there, then we just close the calendar if you choose. And I think that calendar is running right now.
You said about $1?
Yeah, a little more than that. This one is $2. The 85 calendar, I think, is just a little bit of a bridge too far for 2 weeks. So let's see here, spread. So I'm seeing, and then the September 2182. What happened to all my 82.5s? I'm not. I got 82.5 August 30, but they haven't listed the 82. Because some platforms I'm seeing it, other ones I am not, which kind of makes it annoying.
The AUG 30 182.5s, they're $1.20.
Right, and now I've got the only other choice I have here is the 180s.
And then the Septembers are, so you're paying $2 for that calendar.
I would if I could get the strike to come up on it, but I'm not. Which I don't know why I'm not. Okay, well that kind of sucks.
Well,
because I'm seeing it in live vol here, but I'm
probably
not
just need
seeing
to
it here.
open and reclose your trading platform. All right, everybody. We do have some questions, and I'm happy to answer them. We're always happy to answer. Surf Dancer says, "Good morning, Dylan, from Dillon, Colorado." Good morning, Hogan. Good to see you. Vicky got in at 9 cents and out at 18. Good for her. I'm monitoring AVGO has rallied up to resistance at the top of the Donchian channel and has filled the recent gap from mid-July. We do like AVGO. Post split, it definitely took a dive, but definitely could go higher. Chip, you're 100% correct. What about a spread in December? You are totally, if you want to spread off my December calls, be my guest. I think the options are cheap enough that I don't mind just flat out owning them. I typically spread when volatility is in kind of not overly cheap. So I spread when volatility is, some people spread when the price of the actual price of the option is expensive. I spread when the volatility is somewhat expensive. We are not the same. So that is why I don't spread this, even though it's $12.40. But if the $1,240 is a little big for your budget, yeah, go ahead and turn it into a call spread. You could sell the 195s against the Dees 180s for a total of 750. Says Ed. That is a wonderful idea. Seeing three. What would happen to the calendar in different scenarios? Amazon goes up, Amazon goes down.
Well, the calendar is going to lose value if Amazon goes down. You are covered for, I'll show you here in a second here. Okay, give me 1 second. You can kind of see, whoopsie. Well, of course, I don't have that. Oh, dear. All right.
So the thing you actually want Amazon to go up a little bit. What you worry about is too bit strong of a move up.
Right.
So if Amazon's going to 190, that's a problem. And if Amazon drops to 165, that's a problem. Your hope on the calendar is for a slow move higher to 182.5.
Right. That's definitely the idea. Again, because you have NVIDIA earnings, kind of putting maybe a cap on how tech reacts, because Amazon still reacts as a tech stock. That's how I kind of see that. So I was trying to get a already. All right. So here I got some. All right.
All right.
I'm working on getting this thing for you guys here. Give me 1 second. And it's not letting me do that. So it might let me do this. And hold on here. So I'm going to sell this one. Oops. I'm going to buy this one and sell this one. And then I'll move it over so you can see. And all right. Now, getting there. Let's get rid of, okay, we want to sell that one. And we want to get rid of that. So the calendar's decaying at $37 a day. Let me get the date squared away here. Today's the 19th, right around $36 a day on a 10 lot. So it's very little bit. So it's kind of like owning a call essentially. So it is a little tight of a calendar, I would say here. And the short call gives you a little bit of cover on a rally. I mean, on a downdraft. How I would manage this in general would just be to, if we pull back, cover the short call and see if we get a bounce the other way. That's how I would do it. And that would give you kind of what I would say an intermediate step.
Yeah. And I don't think we're due for another like major Amazon gap here. I think that was like a relief gap from being kind of oversold. So I think you're pretty safe. If it gets to 182.5, you close it. But
real simple.
Yeah. Which is why I like my simple, one of the reasons why I like just buying a call sometimes is like, you want it to go up, you just.
Yeah, I would say buy the call. If you were thinking about buying Amazon, buy one call instead of the stock, because you're going to, I mean, you could do very well.
It's cheap. All right. Well, folks, we want to, Andrew, you can unshare. If you want to post that in the area, make sure you don't email it. But we want to thank you here for joining us on the Ticker Highlight Show. Reminder, we're here every week at 10:30 a.m. Eastern Time, delivering great ideas and great content. We look forward to seeing you next Monday at 10:30 a.m. Eastern Time. So for Andrew T. Giovinazzi, the Viking of Volatility, the Vicar of the Vix, and of course, Leisha J. Leslie, Queen of the Candles, I'm Mark Sebastian. I am your only option. Have a great trading week, everybody.